Right. Good afternoon. Thank you for joining us today.
Good afternoon.
Would you please introduce yourself in the name of your company?
Well, my name is Lambros Anagnostopoulos.
Yeah.
Difficult to pronounce, but it's very common, by the way, extremely common in Greece. The company's name is SPDI, stands for Secure Property Development and Investment, which in turn stands for Southeast Continent Unique Real Estate Properties Development and Investment.
All right. So, how long have you been on the market?
Well, the company we took over 5 years ago.
All right.
Before that, we were doing the same thing with other companies.
So you've got quite a history for this, yeah.
We've been in Eastern Europe for 15 years plus.
All right. Can you talk us through your portfolio? Where are the properties? Who are the tenants? And what are your investment criteria, please?
Well, we have our target is income-producing assets, so we acquire assets that are let or mostly fully let, commercial assets. Therefore, we are in 4 different countries at the moment, which are Romania, Bulgaria, Greece, and Ukraine. As you can understand from the names of the countries, we're looking at Southeastern Europe, meaning everything south or east from Poland, Czech, Italy, and Austria. There are other countries there, but we're not there yet. And we have assets of several property types: office buildings, big box retail, and logistics. Ukraine and Greece is only logistics. Romania, Bulgaria, all others.
What saying like Greece? What do you make of Greece? You know, the situation at the moment with Greece.
Well,
But is it a buyer's market? Would you say, or would you have to be cautious?
You definitely have to be cautious.
With the economy,
bought into
yeah.
Greece 2 years ago in the summer of 2014, 1.5 years ago, when things looked that were turning positive, and then again they turned negative.
Yeah.
So we stopped. We have our eye on Greece. There is tons of potential in the market, especially since the Chinese, meaning Costco, are running the port of Athens called Piraeus. They leased it. It was privatized only last month, so they have it now for the next 40 years. They plan to make it the port of entry of Chinese goods into Europe. So there's a lot of stuff will be passing through Greece, hence logistics and office would be needed more.
Oh, yeah.
Having said that, the political situation is still difficult, especially the financial system, meaning the financial institutions are on a thin line.
Definitely, yeah.
If we go over this hump, then sky's the limit in terms of growth potential, but we need to go over the hump.
Yeah, I'd agree there. There's a lot of talk about European yields compression play. Can you explain the key drivers behind this and how the SPDI is benefiting?
Well, I can, and what I'll do is I'll also show you a table, what I'm talking about, because it is worth seeing as well as talking. It may not be easy to see, but it doesn't matter.
Yes,
you
yeah.
see sort of bars that are long at the beginning on top and very short at the bottom. These are yields in countries starting up north with Ukraine and Russia, going down to London and Germany, England and Germany. So there is tremendous difference in yields, and there is difference because there is difference in risk. Having said that, the same way that Central Eastern Europe, meaning Poland, Czech and Hungary, have come much closer to what the European Union looks like Germany and Austria, and therefore their yields converge. We expect similar movement in the yields in Southeastern Europe, meaning Romania, Bulgaria and Serbia.
Hence you're investing in them areas.
They have, hence we invest.
Yeah.
For example, we bought an office building of headquarters of a French multinational food company in Romania at 10 cap, 10% yield. Same thing in France, same company would cost 5 cap.
Yeah.
So what's the difference? The same tenant, the same good market dynamics behind the tenant. And the country, Romania, is doing very well. So the macroeconomic there are good. Romania, for example, has low debt to GDP, low cost, low tax, flexible labor markets. People moving in to do business there. So why should the cap rates be higher? They shouldn't, we believe. So they're going down. They are going down actually as we speak, and we expect them to converge.
Sounds like a good business model actually, because obviously you're letting basically the economy catch up with yous.
Well, this
is go forward.
This is more or less what we believe, that the macros are there, the economy will grow, therefore everything will grow with it. And the big reason for people not being there investing is it's kind of exotic for Europeans. Plus there is this sentiment that if you go there you lose money. which is based probably on perceived risk rather than real risk.
Yeah, but it's politically stable.
Well, European Union countries
yeah,
are
that's
stable.
what I mean. You can't get any stable, and that can you
Actually,
really.
European Union, Britain is the less stable because of the referendum in a month. So
Yeah, that is a
touch and go.
Yeah,
everything else is more stable. So
Yeah, that's true. Actually, that is that strange conundrum coming up. Yeah, too. What are the dynamics of the southeastern Europe commercial property market, please?
Well, there are two particular drivers. One is the economy, the macroeconomics, which are doing good. But in addition to that, there are the dynamics, the macro indicators of the market itself. The Southeastern Europe, all these countries, including Greece, by the way, have not really developed much property, modern property. Romania and Bulgaria opened up in 2005-06. They did have 2 good years before the crisis, then they stopped. Nobody's developed in the last 10 years, the last 5 to 6 years. So there's a lack of modern property across the countries. They need more office buildings, they need more modern logistics, they need more residential. Actually, Bucharest is the city in Europe, Eastern Europe mostly, with the least modern, meaning post-1989 residential stock, percentage-wise, than any other city, even Moscow. Simply because they had old buildings, they didn't have time to build new ones, so they stick and they live on the old buildings, which means the property stock needs to be replenished, which means market drivers for growth.
Yeah, definitely, yeah, because that would change the economy totally, wouldn't it?
Exactly.
If that was going to happen.
And the only reason is they haven't done that yet is there was not money, there was not enough money to the retailers, to the population, to the banks. Now the economy is moving, standards of living are increasing, average salaries are increasing tremendously every year, double digit.
So the infrastructure basically has to change, doesn't it?
So it has to change, it has to follow.
Yeah, it's got to change, definitely. 2014, 2015 were periods of significant growth for you. Can you tell us about the acquisitions you made and the effect they had on your business?
Well, we made a number of acquisitions, and some we used cash that we had raised from our shareholders. Some we even we issued shares to the sellers. And that's the reason that the latter happened is many sellers believed in what we're doing, believe in being part of this large real estate regional company, so they would rather exchange their assets with shares of the listed entity.
Right.
The reason we did all that is that we believe that there is a minimum threshold of size that we need to attain.
Yeah.
And once we get there, we will be more liquid, we will be more, a bigger player in the market, we will talk differently with the banks in terms of financing, or the sellers in terms of acquiring. So we did buy a number of assets. We did buy good assets, income producing at the city center in Bucharest, in Sofia, in Athens. We did not buy anything in Ukraine. Whatever we have is legacy. And we bought assets at very good prices, all of them double-digit cap rates, 10%, 10.5%, which are today, if we wanted to sell, they will be much lower, 100 basis points, even more lower.
Okay.
So even today we can realize profits if we want to. We don't want to sell because we want to create, as I said, the minimum threshold.
Yeah, your portfolio, basically add to your portfolio and make it larger as you go forward.
Exactly.
And that'll attract bigger investors.
That'll attract more investors. We have big investors, but we don't want to have just few big investors. We want to have many big or small investors.
Yeah.
We want to create something that everybody would like to be part of. So obviously we don't have everybody as an investor, but the more the merrier.
All right, that's a good answer actually. That we'll lead into this one now, doesn't it? This is the next one. Will you at some point consider paying out dividends?
We considered paying out dividends before we were born. So yes, the answer is we will consider paying out dividends as soon as we can. The reason we cannot pay dividends, we are cash positive and we are profitable now, meaning 2015, even 2014. But operational profitability. What we do have, since we have legacy land and investments in Ukraine, every year we take provisions on it. Under IFRS, we're forced by the auditor to take provisions. I understand why. And we end up having a negative P&L, bottom line, which does not allow us to issue dividend under the Cypriot law. So we need to be profitable to issue dividend.
All right.
This year we will hopefully not take any more provision. The company is profitable anyway, so we'll be able next year to issue dividend, hopefully.
Right, so
It is a target.
It's a serious consideration.
Absolutely.
Yeah. This is the big question, if you like, at the end, but what can investors look forward to in 2016 and going forwards, and new investors in your company?
Well, all investors should be looking forward to our value creation proposition being reflected into our market price of a share, which has not so far. Hopefully, the more we do transactions, the more we explain what we do, the more the share performance will reflect what we're doing. We are under a huge discount to NAV, which is growing instead of shrinking. So this we need to address by explaining to the market what we're doing better, hopefully. You being one of the channels of doing so, more, what we're trying to do. But as soon as this happens and the trend upwards on the share price goes, that will show to the investors that no matter what we're telling them, this is what we can deliver. And we can deliver value. We do deliver value on the annual results if you read them, but we need to deliver value on their pockets, and that's the only way to do so.
You need a bit of sentiment, really, don't you? That's what you need. You need people to pick up on what you're doing.
Exactly.
Because on the AIM markets, a lot of there's so many companies, it's very hard to get your voice above the crowd. So
there are so many companies and we have so many exotic parameters. Obviously I'm Greek, that doesn't resonate very well lately.
We won't hold that against you.
No, thank you. It's okay. I do appreciate that.
It's lovely country.
I cannot do that. My name says it all. The company is Cypriot, that doesn't help much. We are invested in countries like Romania, Bulgaria, and UK. It's not like London, Paris, and Berlin. So we need to go over an education process with the investors to appreciate that this is not, the doldrums. This is actually part of Europe that has a much higher potential than other parts of Europe.
Yeah.
And once they do appreciate that, then the next hump that we have to go over is, okay, you are there, but are you serious doing there? Are you professional doing it there? Can we, trust you to be with you there? Which is also a problem in emerging markets. So that's why we have created a professional investment-grade platform with lots of directors, non-executive directors on the board, all the various benchmark abilities that everybody, best in class should have. So hopefully, if we convince them that the market should be catered for, and we are the right vehicle to do so, then value will be generated for them.
No, that's fantastic. Thanks very much for your time.
Thank you.
Really good. Thank you.